This is Barry Zalma speaking for Zalma on Insurance on YouTube. Today we're going to talk about the publication of Zalma's insurance fraud letter for April 15, 2020, which is available at my website, www.zalma.com, by linking or clicking on the Zalma insurance fraud letter link where you can see the April 15 and April 1 issue. Part of that issue is an article on insurance fraud by insurers. Insurance fraud is simply not limited to fraud by insureds against their insurers, although that is the concern of most insurance companies. Much to the shame of the insurance industry, the reverse also happens. The poster child of fraud by an insurer was Martin Frankel, who created a scheme he masterminded to loot more than $200 million from 7 insurance companies that he controlled. Franklin American Corporation and its wholly owned subsidiary, Franklin American Life Insurance Company, were controlled by another entity, a Tennessee trust named the Thunor Trust. The trust had purchased an 85% interest in Franklin American in 1991. In subsequent years, the Thunor Trust purchased 5 other insurance companies, all of which were domiciled in the states of Mississippi, Missouri, and Oklahoma. Between June 29, 1999 and January 14, 2000, the insurance companies mentioned above were ordered into liquidation by the courts of 4 states in which they were domiciled. Martin Frankel, the man who allegedly controlled a financial empire that included insurance companies, a securities trading firm, a non-profit foundation, and the Thunor Trust, was indicted in both state and federal courts for fraud, criminal conversion, and for allegedly looting at least $215 million from the assets of the insurance companies. Frankel's scheme to defraud the insurance companies, those it insured and its investors, began in 1991 and lasted nearly 10 years. It involved the participation of dozens of co-conspirators and ultimately resulted in the insolvency of the insurance companies. In broad terms, the scheme worked this way. Frankel obtained control of the insurance companies, and once in control, placed 2 of his co-defendants in positions of authority as CEO and CFO, respectively. Those defendants then stole the insurance company's money through a series of financial transactions. To commit their fraud without detection, Frankel created sham companies, used alias identities, and had numerous mailing addresses for phony companies and identities. These defendants transferred the money from the insurance companies to banks or brokerage houses in the United States, and from there transferred the money to foreign banks, usually in Switzerland. They then transferred the money back to the United States, where it was converted to untraceable cash for their own use and to fund their fraudulent scheme. Frankel was eventually convicted of multiple crimes. He appealed his conviction, and the following decision followed his conviction. In U.S. v. Kim in January of 23, following a 2-week trial, defendant Mona Kim was convicted of 7 counts of crimes which arose from her participation in a scheme to defraud insurance companies and investors. The government's indictment and prosecution of Kim was based on her participation in Martin Frankel's scheme to defraud various investors, financial institutions, insurance companies and the shareholders and policyholders of those insurance companies. The witnesses and documentary evidence established Kim's involvement in Frankel's scheme to purchase life insurance companies in various states, and to do so without disclosing to regulators or the public that Frankel would own the companies and manage their financial assets. The evidence produced showed that the defendant participated in Frankel's scheme by assisting in the conversion, theft, and embezzlement of insurance company assets, by using an alias of Monica Kim to assist Frankel in falsely representing that the assets were on an account with Liberty National Securities, of course one of the entities involved in Frankel's scheme, and by establishing, maintaining, and employing blank accounts under Frankel's control. The facts deemed necessary to an understanding of the issues raised in the motion are set forth in greater detail as follows. Upon a review of the record, the court found that the government introduced sufficient evidence. From the evidence adduced at trial, a reasonable jury could conclude that the defendant was a separate culpable party from the Frankel enterprise. Frankel's enterprise was not limited to commission of wire fraud and money laundering transactions, but also included market research, running insurance companies, gathering data concerning financial markets, and conducting special projects, activities, all of which provide ample links between the members of the enterprise, which extend beyond the commission of the charged racketeering activities. Further, the fact that the defendant's actions were also under the direction of Frankel is not determinative of whether Frankel's scheme and defendant, Ms. Kim, were separate and distinct entities. Indeed, the Second Circuit expressly found that the proof used to establish the pattern of racketeering activity element may in particular cases coalesce with the proof offered to establish the enterprise element of RICO. See United States v. Mazzei. Because defendant had failed to show any miscarriage of justice in her trial, the court declined to exercise its discretion under Federal Rule of Criminal Procedure 33 to grant her a new trial. The conviction was affirmed. There are other acts of fraud related to Mr. Frankel that are reported in the April 15, 2020 issue of ZALMA'S insurance fraud letter that you may wish to read in detail. In addition, there is an article about a buyer's remorse with a plea agreement that resulted in the frivolous claim of inadequacy of defense counsel. It includes article about what happens when the insured refuses to testify at an examination under oath, and the rights available to the insurers when that happens. Good news from the Coalition Against Insurance Fraud. Health insurance fraud convictions. Other insurance fraud convictions. Videos available on YouTube. Books that you may wish to buy for your employees to show your appreciation to claims employees and or your clients. Information about new books from the Full Court Press, all written by Barry Zalma. Books from the American Bar Association, Thomson Reuters, and the entire insurance claims library available at zalma.com. If you found this video of interest or use, please subscribe to my YouTube channel so you can learn about new videos as they are published. Thank you for your attention.